Good evening and welcome to the Trading the Tech Show. My name is Derek with iLi Academy, and today is Tuesday, November 17th. So I had an interesting day in the markets today. Um, Not a lot of huge movement in our Forex accounts, but we did get some movement going on. We had a few trades that kind of broke out and were pretty cool. Other than that, though, pretty quiet day. I think that's because the market was down. I think traders may not really have known what to make of the situation in the market. After we've had 2 weeks where we've had some really good news come out on a Monday or on the weekend, and then going into Monday, and then Monday being a pretty good day, up day, and then being deflated, the next day. So today we were down, I believe we were down about 166 points on the Dow. And, so it just, I guess the news on the vaccines has not lasted more than, even pretty much like half a day or so. It's pretty much not lasting. So I think that's telling us that investors like the idea of a vaccine, but they're still not 100% sure that there will be one that comes along that will, end the crisis right away. There's a lot still happening. There's the end of December. There are individuals, I guess the day after Christmas, there are a lot of individuals who are going to lose their federal extension benefits for their unemployment. So there's kind of a lot happening there that's just kind of these geopolitical things that are out there that are bringing uncertainty. Of course, the COVID-19 is actually out there too, just wreaking havoc. So we're not seeing a lot of optimism in that way, I think, in the markets. I think there's some of the smart money is just kind of, gradually kind of leaving the marketplace. So we'll see what happens. We'll see how the optimism, if it resurfaces or it doesn't. But it's just striking to me that 2 weeks in a row, we've kind of had this same exact situation where we've got good news on a vaccine and it hasn't really extended throughout the week. The positivity hasn't extended. So that just means to me that traders are waiting on something else. So we're going to take a look and see kind of what activity we had yesterday, and then look at the charts and just kind of see what activities kind of present themselves right now for going forward. Now, I'm on the Aussie CAD here, and we're just going to go through and review some of the trade opportunities today. This is Aussie CAD. We see that we're above our 720 EMA here, way down at the bottom here. It's a lot of separation between our 200 and our 720. And we see right now is bouncing off of our 200. So by the strategy, we would place our order here on the 100, which is our yellow moving average here, or we would buy on this blue 50 moving average here. You can also use the 21 if you want. It's pretty close to where the 100 is. So I probably would stick with the 100 or with the 50. And so the rate really has to kind of commit back to that level, has to move up there and kind of commit to moving that far. Once it does, it places in the order. Then our expectation is that this trend that has been in will continue to the upside. And hopefully we would get, some more higher highs there. That's the way the strategy is played. Now, if the rate drops down below the 200 significantly, maybe we're down here in the 95.20s area or so, then I'd be interested in buying here on the 200 as well, placing my pending order there. So this is cool because we're getting the pullback that we need. So you can see back here, we haven't had one. Looks like we had one on the 11th. Between the 12th and 13th was the last one. And then on the 16th, we got a little bit of a pullback to the 100, but it was very, very quick. Just one candle really that would have gave us a shot at getting in on this 50. Would have been profitable, but it would have been a quick trade to have to catch. So other than that, we really haven't, from the 13th up until now, we really weren't getting that movement back down past our 100 at least. We got a little bit past the 50 here and there. We're getting that, but they're very, very quick moves. Nothing like the pullback we have now. So, we definitely will continue to look at that one and see if there's, that opportunity actually turns out for us. Now, as far as the Aussie yen, we are still above our 720. You can see that the rate is now down here testing the 720 as well. But the moving averages are above the 720, and they're well above the rate. So there's a possibility that this will continue back up to the upside because rate is above the 720 still. We're just kind of a deep, deep pullback here. So if we're placing an order, we'd place an order here on our blue 50, or here where our 100 and 200 are kind of sitting here together right around this 76.21 area. We would buy there, place our pending buy order there. And so we'd wait for that. Now, if it is definitely going to test this 720 and come down and drop below it, then great. Then most likely we will not enter these trades, the pending order. We can just delete them. If we get down here well below the 720 and the moving averages start to really drop down below that level, then we definitely want to go ahead and just delete it and then wait for the next particular opportunity. Here's the Aussie New Zealand. We have our 720 here coming across the top. The rate is below the 720. We've actually, yesterday we did jump up above our 200, between the 200 and the 720. So we could short that order based on our 50 or our 100 here, even the 200, because we got far enough past the 200 moving average where we could drop a short order on it. And we definitely would be profitable there. So we've had a couple of profitable trades on it today already for the Aussie New Zealand because it fell back into trend to the downside. You can see the moving averages are, all in order, and they're starting to widen out now as well. So the expectation is that we would continue in the direction of the overall trend, which is to the downside. The Aussie US, you can see our 720 kind of peeking out at the bottom here. So there's a lot of space between our 720 and our 200 here. The rate is below the 200. It fell far enough below the 200 where we could actually buy on this 200. If we want to be more conservative, we'd wait for the 100. So we'd place our order here or on our 50 as a conservative, type trade. But if we really wanted to be a little more aggressive, we could go ahead and place our order here on the 200 to buy, because our expectation is that we should, even though we're pulling back against trend, we should continue in the direction of trend. Now, as far as the CAD yen, CR 720 just kind of moving along across the top here. All of our moving averages are in order to the downside. So we do have trend. We have mature trend to the downside. So what we're looking for is really a pullback to our 50 or to our 100 here. So we got yesterday a little bit of pullback. Yesterday's trading, we had a pullback past our 50, but that was pretty quick too. So we only would have had a short time to actually place a trade maybe on this 50 to sell, or on the 21. If we were using the 21, if it's part of your trading plan and you feel like you want to use the 21, you can do that as well. But this would have been a profitable trade too, and it wouldn't have taken very long for that to go profitable for you. As far as the Swiss yen, same thing, right? We've got our 720 kind of right here. We're opening up now. We've got this nice gradual trend growing here. The moving averages are starting to widen out. They're all in order. So we have a mature trend, and the rate is starting to pull away now below the 720. So our expectation is that this trend would continue. So what we're looking for is any pullbacks that we can get to the 50 or to the 100. Looks like we played back close to the 100, a little bit beyond the 100 in yesterday's trading day. Let's widen that out just a little bit. You can see where we jumped up beyond the 100. So our short would be here on our 50 moving average. And then that would have been a nice profitable trade for us as well. So that's nice. The Swiss yen, we were worried about that a little bit just back here when we were looking at it. We could see where we jumped up beyond the 720 even, but then we resumed trend because that's what, we had trends set up below the 720. So even though we jumped up the rate beyond it, we still went back in the direction of trend. Look at the Euro Aussie. On our Euro Aussie, we see that we are below our 720. So we're going to be bearish, right? So because we believe in selling into the downward trend. So we've pulled back past our 200, well past our 200 now. Matter of fact, the 21 and the 8 have actually jumped over the 200 right now. The 50 is headed that way to jump over, but we can drop our order to sell on this 200 here, on our 50 or on our 100. And if it continues to improve, then fine. If not, we leave our order here on the 200. And if the rate comes back down, it should give us the momentum to push back down here, even as low as maybe the 161.60s area. You know, 161.50 to 161.60. That's kind of like where our low was before, right? So we have a lot of room here for a movement down, and we can be conservative and just be cautious by placing our order here on the 200. Now we could place it on this 21. Like I said, you know, if it's part of your trading plan, you want to use the 21, you want to be a little bit more aggressive, you can do that as well. I typically don't use this green 8. That's just there for kind of a reference that we use in some of the auto traders. But other than that, I don't use the 8 for that. At most, I'm going to use the 21. As far as the Euro CAD, we are trading above the 720. So that tells us that we're buyers, we're bullish on this particular pair. We've got full trend, mature trend to the upside because our moving averages are all in order to the upside. They're getting a little bit of separation now, which is good. So this gradual move is quite good. That's what we want to see. Now we did move down late yesterday and lately yesterday's trading all the way down here to the 100 moving average. So we would have had to been kind of quick to get our order here in on the 50 or maybe even the 21 up just a little bit higher. But if we placed our order on the 50, we definitely would have a profitable trade at this point in time. As far as the Euro Swiss, we're going to take a look and see where our 720 is. It's well below our other moving averages. The rate is well above the 720. So we're going to be bullish here, which means we're buyers. We've got a nice pullback going here. The one thing about this pair, it is kind of volatile. So there's going to be some movement back and forth. I wouldn't expect, 100 pips out of it. I'd be looking for 20, maybe, 20 pips or so, and then, calling it a day, because it tends to kind of jump up and then turn around. And just by the range that we see here, maybe you're going to get maybe 20 pips out of it, and then it turns around. So, don't play it for a super, super long-term deal. Just play it for those quick hits, for, 20 pips, 25, 30, just depends, Right now we're pulling down here towards our 200, so we can place our order here to buy on the 100 or on the 50, and we should get some momentum to the upside. Maybe somewhere here, looks like that's around 108.06 or so. Up here is what, 108.18 or so. We're talking about 10 or 12 pips. So I'd be looking for about maybe 10 pips out of this at most, and then at least breaking it even, or just going ahead and just setting maybe a limit for 10 pips and seeing what occurs, Euro pound, we're trading below our 720. Our moving averages have now finally, the 100 did jump underneath the 200 here yesterday, late in yesterday's trading. So now we have full mature trend to the downside. We're just waiting on pullbacks now to our 50 and to our 100, and that will set us up for a nice move to the downside. As far as the Euro Yen, we traded below our 720. So rate is below the 720 now. We've got the 8 and the 21 just about to jump over the 720. Our 50 and our 100 and our 200 are lagging behind a little bit there. So if this move exhausts, my idea would be that we would continue to the upside. So if I'm a buyer here, I'd place an order here on the 50. Maybe on this 200 or on the 100, or maybe on this 200 here. The 200 would be our most conservative trade entry here at about 123.81 or 82. We could enter there. And if for whatever reason the 720 holds as a resistance point and the rate cannot get back past the 720, that's perfectly fine. Our order is up here. We're pending here. So we're waiting for pickup here. And if we never get picked up, then we're not sucked into an order that's going to be headed more towards the downside. So that's why we're not jumping in, placing market orders here. We're placing pending orders to the upside. As far as the Euro New Zealand, Let's take a look here and see if we can find our 720. Here it is. We're trading right below the 720, so we're bearish here, meaning we're sellers. If you look at it, we've been below the 720 for quite some time. This is back since October that we've at least been below the 720. So there's definitely some momentum to the downside. If you look, like, we've been getting lower highs and lower lows, and then we got this nice push down, so that we did bounce from that push, which is to be expected. We're going to retrace some of this move because it's so strong. We're going to retrace some of that, but after we retraced about 50% of that or so, we've started to sell off again. So here I'd be looking to sell maybe on this 50 or maybe this 100. They're both in the same area, right around 172.14 or so. That would be where I'd be willing to place my short trade. And if we get placed in the order, fine. You know, we've got a lot of room to the downside and the trend on our side. Now we're looking at the Euro US. Here's an opportunity for us as well. We're trading above the 720. And now if you look at it, the moving averages are pretty much in order to the upside. So we had mature trend. All the moving averages are above. Right now, we just touched our 100 here. So the opportunity would be to place our order here on the 50, which is right here next to our 21. They're in the same area. So we're talking about 118.60, 118.61 would be our entry point for a buy. And then we just continue to ride this nice trend that we see on up. As far as the pound Aussie, you can see our 720s right here coming along the top here. So rate has jumped over our 720 now. We're well above it, but our moving averages are still below the 720. Our 21 hasn't even jumped over yet. Maybe our 8 has. It's not on this particular chart because this is Diamond Auto Trade, and I just didn't set it up because it's not necessary. So the 21 is about to jump over the 720, but our 50, our 200, and our 100 are very far behind. So I'd be willing to place an order to short at the 50, this 200, or the 100 levels here. Just depend on which one you want to choose. And I'd be selling off at those particular levels because the rate would have to commit to falling back below the 720 before we would be placed into the order short. So it'd fall back into that downward trend. So that's what I would be interested in. Let's kind of slide these over here so we get to the end. Good. Pound CAD anyway. We are trading above our 720. We've got full mature trend to the upside. We've got the rate right now is well above our 21. So we're just waiting on pullbacks here. We haven't really gotten one. Since early yesterday is when we got that. That was, the beginning of the trading day. We kind of got that pullback. Maybe midway through the day, we did get this pullback here to the 200. So our option would have been to buy on the 50 or the 100. And you can see it wouldn't have taken long before we were very profitable in those trades. So now we're just waiting now on a pullback again. We're waiting on a deeper pullback to give us opportunity to do it again. Now, as far as the pound Swiss, looking at this one, we are trading above our 720, right? So we're bullish here. We've got a nice mature trend kind of setting up for us. We're starting to get some separation between the moving averages. Back here, we didn't have that. Remember, we talked about it just trading off to the right here, all the moving averages being really on top of one another. But now they're starting to widen out. They're starting to give us some separation, show us some direction. So we're going to wait for pullbacks past our 50 and our 100, kind of like what we got yesterday. And then we could buy on those levels. It was kind of close here to the 200. You might have been able to sneak an order in there to buy, but our 100 would have been our first opportunity and our 50 would have been the next opportunity. They're very close, but either one of those trades would have been profitable for us at this moment. As far as the pound yen, looking kind of in the same place, right? We're above our 720, right? But we're trading off to the right. Just kind of look at what we've got here. We've got rate that's just trading off to the right. The moving averages were kind of widening it out back here, and now they're just kind of tightening up. Everything's tightening together. So when I look at this, I could place an order to buy maybe here on our 200 or our 100, just because we dipped down quite a bit, maybe even on this 50 if we're being a little more, close to we're willing to be a little more close to the rate, but that's where, I'd buy at one of those levels. I feel like this is still just kind of consolidating, trading to the right. It may not be the trade that I'm looking to take because I've got some other opportunities that just look nicer and that have, developed a little bit more separation in the moving averages. So, just if I was manually trading, I might take that into consideration. That I don't have to have every single trade if it doesn't really, look like it's the best trade for me. You don't have to take it just because it's there. Kind of just analyze a little bit and say, okay, what do I think about this compared to the other opportunities I've got? Can I put my money in a different place that might yield a little bit better or has the potential to yield better, right? So pound US, we are trading above our 720. You see our 720 coming across the bottom here. We've got the full trend, mature trend to the upside. We've got some separation here. We did get a pullback to our 100, just a little bit past it, but we would have to been quick because the next candle, it came here, hit our 50, hit our 21, and then boom, it shot up like a rocket. So this would have been a very profitable trade, like right off the bat for us. As soon as it dropped down here, the very next candle, half an hour later, we were headed for the money, right? So we like those trades. Not everyone's going to happen like, just like that. But, but that's something that we commonly will see. We've got to kind of catch those, when they occur. As a manual trader, that's what we're looking for. So as far as the New Zealand CAD goes, we're trading above our 720, right? We've got this stochastic. I noticed that ever since, back past the 11th, past the 10th or 11th, we've been above this 80 point, right? This whole line, we're above the 80. So that tells us we're in trend, the momentum's to the upside, right? We're trading above our 720. That's kind of telling us too, we're trading to the upside. We're just closing along to the upside. Our moving averages are all above the 720. So that's telling us as well. So we're just waiting for pullbacks. Like we got a couple pullbacks yesterday to the 100. We could have placed our order on the 50. We would have jumped up a couple of times. Not a whole lot of pips there just yet because the range is just very short. This is really just trading to the right to me. So yesterday, it looks like we're just trading off to the right. We got a little bit of upward trajectory to it, getting a little bit higher highs, but I mean, it's a couple of pips really. So it's not a whole lot. But at some point, this may break out. So, if we're taking a buy order on this 50 or, even on the 100, if we could have snuck it in there, then we had the opportunity to, take this to, up a little bit further if it breaks out. New Zealand Swiss, kind of the same thing, right? We're trading above our 720, right? We've got our rate right now came down and touched our 200. And earlier yesterday, we had a rate jump down below the 200. And so we could have placed an order to buy on our 100 or our 50. And right now we'd either be just, kind of waiting for that to be profitable, or if we were placing the order right now, we'd be buying at that level and just waiting for the order to be triggered. Our stochastic down here, you look at it, still hanging out around this 80 mark. So, there may be some opportunity there for it to continue on to the upside. As far as New Zealand yen, same thing with our 720, kind of hanging out down here on the bottom. We got a nice pullback going though, because we pulled back past our 200. We've actually come up and tested it and fell down even more. So I'd be a buyer here. I'd be a buyer on this 200, maybe this 50 or the 100, either one of those moving averages you can choose. It just depends on where you want to get in. And then, even this 21, if you're aggressive, you can use the 21 as well. But the 50, the 100 and the 200 are great areas because the rate will have to commit to this move higher in order to put us into this trade. And if we get beyond that, then I think there's a lot of room to the upside for us to continue to move. The stochastic here is falling below 80 right now. It's pointing down a little bit. So we'll have to see. We're still above 50. Where is it at right now? 57.97. So there's, the opportunity for maybe this even to exhaust. So we'll see what happens here. Looks a little bit like breakout bounce. We actually got a couple of them. If you look here, we had one too. So this is a little bit different strategy that we use. When we come down and we make a new low and we bounce around and we check this new low, like here we checked it and we don't break this new low, typically we're going to trade off to the upside. So that's another strategy that we have, the breakout bounce. So here I see the same thing again. We traded down here. We wrapped around here, came back down to test. We didn't really break. And now we're probably going to trade off to the upside. That's the idea that we typically see. So we'll see what happens with that. We'll see if the New Zealand yen kind of tends to go that way. Now, that breakout bounce would be in the direction of trend as well. So we've got a couple things going for us there. We're not trading against trend, we're trading with trend with that. So the odds of it going up are better than going down. Okay. New Zealand US. We have the same thing, right? We're trading above our 720. You can see that we've been well above the 720 here for quite some time, since about November 4th or so. We've actually started this trend to the upside. We did get a little bit of a pullback here between the 12th and 13th, but then even since then, we've kind of risen up again. So this is kind of the easy trade to take. As long as we're pulling back past our 50 or our 100, buyers. Our stochastic is still hanging out here. It did dip below our 80 mark, but it went right back above it, right? Right now it's dipping just a little bit more. So here's an opportunity for us to buy maybe on this 50 or maybe this 21. The 50 is sitting out here at 68.89, 0.6889 could be our entry point, right? And then, if we're buyers there, then we may have some room to the upside. Maybe we'll just take the gradual ride to the side as long as the trend actually continues. Looking at the US dollar CAD, this one is trading below our 720. We're right now testing the 720. So we've moved up to it. So what I would do is I would short on one of the moving averages here. They're all kind of in the same area here, right around this 130.90s, the low 130.90 area, to short the US dollar CAD. It's the dollar, so it's dollar based. So I feel like, I'm a bear, I'm a dollar bear. So that's pretty much what the market's been doing. So I trust that, right? No matter if it's pulling back, it may pull back pretty hard. It may pull back to the 720. But my idea is that, just fundamentally, the dollar has been weak. And so I expect it to continue, go back into that weakness. I'm just looking for a place to get back in, right? US dollar Swiss, kind of the same thing. It's dollar based. So we're interested in a short trade here. So you can see yesterday we did have a pullback almost to the 100. So we would have placed our order here on the 50. And pretty quickly, we would have had a profitable trade. We had some nice pips to gain there. So we've pulled back since then again. We've actually touched the 100 again. So our short order could be here on our 50, right? This actually is Platinum Auto Trader, so it did short for me here, down here, which is part of the strategy as well. So a continuation of the trend. So we just wait. We can be patient because we know what the trend is. We don't have to panic out because we know for sure the trend is to the downside, right? So even if it's pulling back against trend, that's just really improving price for us. As far as the US dollar yen, we are trading below our 720, right? We've got full mature trend here. Look at our moving averages. They're all open. They're opening and widening out for us to the downside. And we've got, we've got a nice move to the downside. Now I do notice that we did create a low. We did bounce around and now we've created kind of a new low here, even though we didn't break off. So we may actually trade to the upside a little bit before we go down. So we may actually get an opportunity to trade a pullback to this 50 or this 100. It may come because we kind of bounced around here, didn't really break the previous low. And so with breakout bounce, we typically say that's going to trade off to the upside when it doesn't break. Now, if it breaks this level handily, then we continue on down and that's great for us. We just would have to wait for our pullback to our 50 or our 100 to get a new entry into this US dollar yen. So very good. So we were able to cover all of our pairs. We're sitting right here at 29 minutes and about 40 some odd seconds. So, less than a half an hour, you can really go through and analyze your pairs. If you want to spend 45 minutes on it, fine. But really in like a half an hour, you can kind of go through and just see what's going on your pairs, find the opportunities that are available to you. place your orders and then go off to bed or whatever it is for you to get up for work in the morning, or, to do, your other activities in the morning, and not really worry about what you've got going, because you have confidence in the trades that you're placing. You understand exactly why you're placing those trades. So that's what I aim to give you. I aim to give you the confidence to get into your trades and to feel, confident that your trade will be successful. We've shown you examples where trades are successful. We tend to trade back into trends. So all this is doing, strategy it's an interesting thing, because there's a million ways to kind of do it. There's a million ways to maybe to kind of explain it, but I've just found a simple way so that you can see it and just utilize it in your trading plan. Okay, that's all we're trying to do here. So it's not about right or wrong or who's right or who's wrong. You can probably be profitable on anything anybody teaches you to do, but you just need to have a level of consistency and ability to follow the rules and really have ability to kind of trace your steps and get the same answer when you have strategy. I think that's the best way, because then you always are confident for why you got into a trade. You never second guess, right? And you don't get out of trades just because they're going against you a little bit. You don't get out because you know the reason why you got in. That's important too. So a lot of people kind of panic out because they're losing money. But maybe the trade's going to be profitable and you need to just wait a little bit, So, across most of the other investments that we have, people are very, very patient. So you don't have to be a day trader per se in Forex. You don't have to get out on the day. You can day trade some things, but then, some other things are going to be longer term trades for you. For us, long term is going to be a week, 2 weeks, maybe a month. You might have to wait it out a little bit, but that's fine, because in the end, you're going to be profitable. You never, ever, ever get out of a trade unless it's advantageous to you, or the market decides that you absolutely have to. So, that's something that's probably not being taught to a lot of people. A lot of people are being taught, get out if you're losing too much money, get out if it hits a certain percentage, that type of thing. But that's not really realistic, I don't think, in the market. I don't think people are really being successful with that. There's a reason why you're getting all of this information and people are failing. Watching some videos today on YouTube and things like that. And people are going to these companies and they're teaching them somewhat, but they're not really giving them an idea about that, because it's not popular to say. And a lot of those people that are at these companies, they learn from other people who didn't know either. And they're just spitting out what they were told. And then they just add their little flavor to it. And then all of a sudden it's their thing. So, I think, this idea of holding on to your trades, it's foreign in our Forex market, but it's not foreign in other markets. How many people held on to Bitcoin and now they're being rewarded? Bitcoin's almost $18,000 now. But what about the people that, got out at 6,000? There are people who bought at 12,000 and they got out at 6. They lost $6,000 when they could have made $6,000. There's a lot of people like that because they just couldn't wait. They couldn't be patient. They felt like it's never going to come back. They convinced themselves psychologically that they're going to fail, and they did. But the people who held on, they made money, So, and a lot of people were laughing at the people that were holding on, but now they're making money, right? And so it's not a laughing matter anymore. So you don't, this is kind of investment. It's not always, it's trading at the same time, but sometimes it's an investment too. This is the hybrid that Forex is. It's a little bit different animal than what you have in the stock market. It's definitely different. Just, a lot of the parameters are different. So there are individuals online saying, oh, well, I taught myself and I went to these websites and the information is everywhere and you can get it everywhere. I'm here to tell you that it's not. You need some guidance, because if you don't have that guidance, you're going to be all over the place for a long time. Your failures are going to eat you alive, and you're never going to get to the point where you're going to be successful, because you'll run out of money before you run out of time trying to experiment. So that's why you need a mentor, and that's why people teach. And it's interesting because it's like, it's the only industry, it's not the only industry. I won't say that, because I experienced the same thing in the music industry. The people at the low end, don't ever want to spend any money to learn. They will tell you to the wits end that there's always, to them, there's a shortcut. There's always a shortcut. You don't need to do this, you don't need that. And I understand, I get it, because their funds are limited. But when you start to deal with individuals whose funds are not limited, they're not worried about that so much. They pay for education. So everything in the world requires education, and I don't feel like I should have to give away my education for free. I paid a lot of dues to get where I'm at. So, I paid a lot of dues to get to know what I know. I sat on trading desks. I worked in it as a career for years. Just having that knowledge. I've, coached people. I've lost money. I've put real money behind things and lost it. I've gained money. I've got the experience and the time and the mastery of it to understand the business. So, I'm not just going to give that away free, because if you give it away free, people don't pay attention. They don't value it. I always tell the story, like, growing up, I grew up in this kind of enclave of apartments that was surrounded by people who we felt were, the rich kids or the wealthy kids, or, some of them, like, they lived in, back then, it was like huge to have $100,000 or $200,000 house. That was a big thing. Houses just weren't that expensive. Even now in that area, houses still are not, the price that they are in Florida. It's totally different, in upstate New York than it is in Florida. I mean, you can buy a house for 50,000, 60,000 and have, like, a 3-story house or something. It's different. It's definitely different. So for somebody to be living in a brand new built house, with all the amenities and everything, that's, couple 100,000, that was a big thing. And they were all around us, homes that we never could dream. We could see them, like, over the fence where we lived. You can see them over the fence. We could see them when we walked to school, but we didn't live in them. We never had the idea that we could live there, because, they were just in a different stratosphere than us. They were just different. But we went to school with all those kids, and those kids would get, we went from walking to school in snow up to our hips, and being cold and freezing. And those kids, when they were 16, they got new cars. So it was different growing up around. It was good because we got to see it and know that, okay, that's something that happens. But at the same time, I also got to see, at least I learned by looking, that when people don't pay for something, or kids are young, they don't pay for something, they don't treat it well. Their kids getting in accidents, like, right away. They're totaling these cars and things like that. And the parents just buy new ones. Some parents stuck to their guns, but other parents, they didn't, like, they're driving their parents' cars, and the parents' cars are very expensive and things like that. So, for a kid who's 16 in high school, this is an expensive car, BMWs and, Nissan 300Zs and all these types of things. They could do it. But the kids didn't really take care of the vehicles that their parents would give them. They were just doing some things. Unfortunately, in that situation, there are kids that I know that have lost their lives. People that, wrapping those cars around poles and things like that, like they just did, or drinking and driving, those types of things. They were very, very prevalent because they didn't care, because it came very, very easy to them. So, if you have to work for something and you have to pay for it, you kind of take care of it. And so that's why I think it's important to pay for your education. You pay for it. You don't expect to, well, I guess now people expect to go to college for free. Everybody's saying, well, information's free. No, it's not. It's never been free. And free information costs you far more than paid information from a pro or a master, because a master and a pro is going to buy you what you don't have. The greatest asset that you need, which is time. That's our job. We buy you time. And we took some of those lumps so that you don't have to take them. We can teach you, like, okay, here's how you get around some of those lumps. Now, you're still going to take some, because you're just going to be inexperienced for a while. That's going to happen. But we try to get you around that, and so that when you see it, you at least recognize it. You go, oh, you know what? I was taught this. And this is kind of what happened to me. I know how to deal with this because I was taught. But if you don't have that psychology, and you've never been kind of given the psychology of trading, you're going to struggle for a long, long time. And the only thing that you're going to have that's going to prove whether you're successful or not is whether you win or lose. And I'm going to tell you right now, if you look at any page for any broker, most of them have the disclaimer that's required by law right now to tell you how the individuals who trade with them do. And most of them are above 70% of the traders are losing traders. So you can't convince me, that you don't need the education. You're just going to find it on the internet, because at least 70% of what you're getting on the internet is going to be from people who are losers, not the person themselves, but they're losing in their account. And they sound confident, and because they're winning today, but they're losing tomorrow, and you don't know because they don't tell you. I've sat in radio shows with people who can't trade to save their life. I've seen radio shows that they can't trade to save their life, and they're in these companies and teaching people. I've sat across from them. I've sat across from people who are great and who are at least doesn't have the knowledge, but I've definitely seen people that don't have it. I've seen people that call themselves doctors of trading, and they've have followings, huge followings, and they can't trade to save their life. And I've seen people be in training classes that people have flown in from all over the world, and they've paid like $5,000 to $7,000 for a week to sit with these people. And they started trading on Sunday, and on Wednesday they placed one trade because the guy don't know what he's doing. And I've seen it happen, but he runs his mouth and does his show like he can trade. So, and he hasn't found it. He couldn't find a trade in 3 days. On Friday, there was a mutiny. One of the other guys who actually was a great trader was pacing outside the door one Friday morning. And, we're in the middle of our show, so he can't just break in on our show. We can't deal with that at this point. Myself and my boss, doing our show in the morning. And, but I see him pacing outside the door. I'm like, okay, why is somebody pacing this? This is typically part of the building no one's in, this is just where our show takes place. And he's pacing outside the door. And we get out of there. He needs somebody to go upstairs because there's a whole mutiny, because this guy hasn't traded all week. They're not profitable. They're not happy. They want their money because they spent like $7,000 for this guy who's supposed to be the guru, and he did nothing for them for their $7,000. So you got like 10 people up there. You got like almost probably $100,000 worth of investment in training and education for a week, and no one got anything out of it. So I ended up taking a guy. I remember the guy. He's out of London. I just wish I could contact him. I wish I could find him again. His name was Ibrahim Jallo. And Ibrahim came from England. He was on his vacation from England. I guess he got like 6 weeks vacation. This is the second trip he had actually taken to this company, and he had paid the money again, $7,000 or so each time, to come and get the education from us. The first time he left, he didn't feel confident like he got the education. The second time, he said to me, he told his wife he wasn't coming back to England unless he got some information, unless he learned what he was doing. Because of course she's concerned about the money he's spending and the travel he's doing. He had to come all the way from England and stay in Orlando for a week, paying all of his own way. That $7,000 didn't include anything except the training. So he's got to pay for his plane ticket. He's got to pay for his hotel. He's got to pay for his meals, all of that, and still pay for the education. And then not get it is not good. So I literally had him sit in on one of my shows, my second show for the day. My second show was the mid-morning market show. That was at 11 o'clock. I had him sit in on that show. I spent some time with him after that show. Like, here's the catapult strategy. This is how it works. This is exactly what you do. And I was able to put it in his hand, and he was able to fly home to England, because he told me, he said, I can't go home unless I have something, and I don't have nothing because this guy didn't teach us anything. So literally in like his last like 2 hours, being at the firm before he had to really kind of get out of the US, he got some information from me. So, so I've been in these situations, and that's why, when someone's online saying, oh, I can just learn from, I know what you're up against. I know exactly what you're up against because I've watched these people do it. And like this firm, I don't knock the firm at all. They did a lot of good things. They were selling across the world, stuff like that. They sold in France, they sold in different parts of Europe. Like I said, Ibrahim was from England, so they had been over there. They were literally, there was a tower that was built in Orlando, and literally this company's name, they had bought the lease rights to put their name on top of this tower. The tower is there, but the name is not because they had problems after a while. Like they ended up with a problem with American Express. American Express like froze their account, and like $1 million in revenue was basically frozen by American Express because they were getting complaints. So they couldn't even resolve the complaints anymore. So when I started working there, I was like, okay, all these people are asking for refunds and they keep telling me what to tell these people. And then after a while, I'm like, okay, the story every week keeps changing. What the heck is really going on here? And so it just really turned out that, the money was frozen. And some guy, actually, one of the traders who had been there, he was gone by the time I got there, had ripped somebody off for like 250,000. Like, he had everybody believing that he was this trader and he was a great trader and all that stuff. Some guy sent him 250 grand and he disappeared with it, left his wife and everything. Like, his wife was at home, like he didn't come home. Nobody knows. She came to the office looking for him. And we're like, we don't know where he is. The guy disappeared with 250 grand. So I'm telling you what I've seen. This is just from experience. And that's why I'm saying, like, you cannot trust everybody in the game. So that's why I kind of do my shows the way I do them. I try to make it simple so that you can see, I'm a real person. Am I always right? No, I'm not going to trade all the time and be correct. I've had to hone my skills too through trading as well. But I have the experience to say, okay, this is what you watch out for. This is how you kind of get through the tough times. This is where you get through this particular trade. This is how you even look at a trade, know if it's a good trade or a bad trade. This is how you know whether you're successful or unsuccessful. Those are the most important things to know. And you don't get that from 90% of the people that are online, because 90% of the people don't have any experience. They really don't. They got their experience listening to people who didn't have any experience. And then you got the people that have a little bit of experience, but they're not, they're really just concerned with getting your money. There's a lot of companies and places out there like that. So I just encourage you, like, you've got to really get some type of mentorship. You've got to deal with someone like us who really cares about whether you're successful or not. There is a level that I do have where I'm like, if you're not going to listen to anything that you're told and you're going to tell me I don't know what I'm talking about, I'm going to let you fail. I'm going to let you fail because that's the only way you're going to learn. You're either going to learn or you're going to disappear. And either one of those works for me, because I don't have time to spend with that. I've got students and individuals who need my time and my attention and who are doing it the right way. And I want to help them. But if you're just going to like poo-poo everything and just not do what you're supposed to do, then you're supposed to fail. And that's what a lot of people don't understand. So I got to let it happen. At some level, I'm going to let it happen. I've had people jump on the auto traders or whatever, and then have their friends tell them, oh, you shouldn't do this or whatever. And they close all their trades, even the losses, everything. They just close everything. Okay, fine. You listen to your friend. I'm going to let your friend tell you whatever. I'm not going to argue about you taking advice from your friend, because your friend doesn't have the experience that I have. And I don't particularly care. If this is what you want to do, I'm going to let you be autonomous and do what you want to do. Fine. But the people that listen, they're going to benefit from it. The people that listen and they learn from it and can trust what I'm telling them, they're going to be fine. I have no question about that. I've had a lot of experience in the business, around the business, to know what happens with my students when they listen. So, so that's the most important thing. So it's just too bad that we're at this place right now where Forex is such a great opportunity. It's the perfect opportunity for now because of COVID-19, the pandemic, and all that type of thing. It's really, really sad that there's so many people out there trying to teach it, and they know for a fact that they just got in the business and they're trying to teach it because they're trying to make a quick buck. I'm not going to lie to you. I want to make money off of trading. I do. I should charge for teaching. I do, because I'm going to make money off of it, because it's my expertise, it's my knowledge. I have well over my 10,000 hours. I probably got 20,000 or more. I don't know. I haven't sat down and calculated whatever, but I've been around this game for 25 years, having done it professionally, sat on trading desk for market makers and things like that for years. So I've been around. So I don't question my skill. Do I have to do it? No, I can do other things. I have tons of other things that I can do, that I am doing actually too, in addition to this here. I've got some other things I'm doing too, but this is what I love to do. So this is why I'm here. And, I was asked to be here by individuals that I've taught in the past. Individuals who expressed interest in me coming back. So I've kind of told that story before too. I'm not going to go into that tonight, but I've told that story too. So the idea that, that you can come on and get somebody to kind of mentor you, kind of guide you through, show you trading opportunities like what I showed you tonight, very visual, very simple, very easy. Somebody almost brand new can begin to understand it and start to use it, who can provide the information like the education online, all of that stuff. These couple shows a day that we do, and some commentary around it. I think it's good. I think you stand a chance of winning. I think, that's what I'm here for. I'm here for you to be successful. I don't make any money if you're not successful. That's the whole key. I really don't make money if you're not successful. I make a ton of money if everybody's successful. That's where my money will come. I'm very cheap. I'm cheap compared to other people. Other people are paying $200 just for the privilege of putting their name on a program. $200, $225, $235. Every time you turn around is a different price for everybody. Me, I'm not like that. You pay the one price that everybody pays. I don't care who you are, millionaire or not. Everybody pays the same price. And it's at a level where it's like $1 a day. You can pay $30 a day. I mean, $30 a month, and get these classes every single day, twice a day. Get the opportunities pointed out for you. Access the trading education. $1 a day. It's too much. I can't get that. I've got to run everything for free. Like, I've got to pay to run everything that I run and buy everything that I have to buy and all that stuff. And then I have to give it away. I'm just not gonna, I don't, whatever. Go learn from the 90% who don't know. That's the way I look at it. Right. But those of you that will understand and want to jump on board and can be teachable, then fine. You're going to make out all right. You're going to be fine, because we're not going to stop here. We're going to, go to stocks. We're going to go to options. Those things just have a higher barrier for entry. So, it doesn't even really matter, how much money you have. There's just still another barrier for entry there. Even just for tax on a tax basis, there's a huge barrier for entry just for the way your taxes are handled when you become a day trader for stocks. Most people can't afford that, but they don't know they can't afford it. They have no idea that this situation even exists. So probably they're either not filing taxes, or they just lost enough money where they're just fed up with it and they left it alone. But if you happen to make money, you're going to have a problem, because you got to pay the taxes on that, especially if you spent the money, So, I'm here just to help people be careful, and understanding, what it is. Forex is a great business. It's like the absolute best business I think that you can be in right now. I think, outside of, with the lowest barrier for entry that you have, it's a great income source that you can start setting up. This should go with you into your retirement. You should actually have an account that's set on an auto trader that will trade until you retire. That's, everybody should almost have that. And you can start with a couple $100. Everybody has a few $100 they can do it with, a few hundred, 500, 1,000, and that they can grow over time. And it trades conservatively, so you can grow. I think having 1,000 or 2,000 when you first start, that's like a great place to be. And you grow that until, you get to retirement age. It'll probably fund your retirement. you know? So, people don't think like that. They don't think long-term. They're like, if it's not turning thousands of dollars for me today, and I can't floss, and I can't have the car, and I can't have the house and everything, and walk around with my chest popped out, then it's not worth my time. And that's great. Stay away. But for those of us that understand, this is for later on. It's going to be some money now, but the big money's later. Set yourself up to win. Don't be a Walmart greeter, at 75 years old, because you couldn't be patient now at 25 or 30. A lot of people, that's how they end up, because they couldn't be patient, or the bottom falls out. We don't have to worry about that. The Forex market is a great market to be in. So I've gone on too long and I've talked too much already. So once again, this is Derek with iLi Academy. I'm glad that you came to the show. If you have questions, concerns, feel free to contact me. Let's get started. Let's get some work done, and tell your friends about us. All right. All right, I'm going to get out of here. We'll be here early in the morning on the Daily Market Overview show at 5 a.m. We'll be talking about the fundamentals in the market and just whatever news reports are going to drive our markets for the day. All right, we'll talk to you soon. Have a great one. Bye-bye.